All right, welcome back to the Weekly Rebalance. How are you doing, Nick?
Doing well. How about you?
I'm doing pretty well. Can't complain. We're going to have a little bit different show this week. I feel like we've been covering the traditional stock markets, bond markets, all of that pretty well the last part of 2025 and into 2026. So we're going to cover those markets here as well, but quickly. And then we're going to get into some gold and commodities and how that ties to some deep alternatives. We're getting into the luxury collectibles and trying to tie that to how do they perform as investments. So I'm ready to get into it if you are, Nick.
Yeah, same here. Should be a interesting and different episode.
Yeah, a little bit different episode. So far, not much to cover from a year-to-date perspective. I mean, the stocks are going up. The S&P's up 1.5%. Dow Jones is up, Nasdaq's up, Russell's up, International's up, everything's up. So, I mean, it's such a short period of time. I don't take too much stock in that thus far, but we have seen a generally broadening market, and you know, overall, been pretty positive. Not much that many investors can complain about in stock markets thus far this year.
Oh, I tend to agree with that. At this point, it's hard to point out any notable trends since we don't have that long of a time period to observe. But like you mentioned, we have seen a bit of a broadening out. Value's been performing very well. So that's going to be an interesting one to watch throughout the rest of the year. But
Yep.
again, it's early. We don't have a whole lot of data to go on. So hard to draw any hard conclusions from that. But it's
Yeah,
been a
absolutely.
good year so far.
Good year so far. Well, and you know what trend has continued from last year in terms of continuing to perform well is gold and silver. Um,
Yep.
gold and silver. I was just looking here on the Bloomberg. Silver hit a new all-time high today. I believe that's an all-time high. Let me just double check that. Yep, new all-time high, 86.95 an ounce. Gold hit a new all-time high yesterday, pulled back just a little bit today, but hit a high of $4,597 an ounce yesterday. And that's a trend that was very, very strong last year, and thus far this year has continued as well. Been pretty interesting.
It really has. It's been really impressive to watch that take off.
Yeah, absolutely. But very impressive. So gold was positive 66% in 2025. And we covered this a little bit earlier in some earlier episodes, but gold was up 66% in 2025, I think almost 67%. And silver was up massively, 145% or something close to that for the year, which one of the best years on record. And, it's interesting. Those are traditionally speaking, alternative assets, right?
Yep.
Uh, however, uh, you know, we're going to cover for our research of the week here, wanted to cover watches, luxury items, and gold, you'd think maybe is a input into these luxury items, silver as well. But the luxury items, they had price increases, and the stocks that sell a lot of these luxury items actually did quite well last year. But if you're just looking at the collectible value of some of these, like your major watch manufacturers, your luxury goods, your luxury cars, art, things like that, they did not have the greatest year in 2025.
Yeah, it's been an interesting one to watch. And I think one of the more interesting things of what sent us down this path for this research this week, uh, there's been a decent amount of media coming out, at least in the watch world, where they're talking about how gold watches are maybe a little bit of a better value than they were previously because we've seen the price of gold skyrocket and we've seen the price of gold watches. They've increased a little bit again as manufacturers pass on inflation, tariffs, and so forth, but they haven't increased at the same level that we've seen the price of gold and silver increase, so compressing their margins a little bit ostensibly.
Right.
In an interesting way to view that, I've got some data here. I pulled this from watchcharts.com, and basically what they do is they track the price action of different watches. And the one that I chose for looking at something like this, following precious metals and their price performance compared to precious metal watches, was the Rolex day date, because it's only offered in platinum and gold. So it makes a nice proxy for us to compare that to the performance of platinum and gold over a similar time period.
Right.
So over the past, let's see, since 2017, the price of the Rolex day date has increased by 70.1%. And it's a little bit funny, but especially if you're kind of new to the watch world, Rolex watches and a number of other watches, they don't necessarily trade for their new asking price unless actually they're worth more in a secondary market than the initial asking price is. And that's because they're hard to get, things like that. So they fluctuate a decent amount, and we see some pretty crazy price action, particularly around COVID. That was a big deal where watches ran up in value. But we can see how these assets are trading in a secondary market using data providers like watchtreads.com, and they have a lot of interesting data. The interesting thing is when you compare that to the price movement of gold and platinum over that same time period, we have gold up 285% and platinum up 145%. So just the raw materials going into these watches have increased more than the price of the watch itself. Now, obviously, they have very large margins that they can break into to offset that change. But I find it interesting that they're not passing it on to the clients. Particularly, I didn't realize this, but so the day date when they make it in gold, it's 18 karat gold, which apparently has a 75% pure gold content, which is more than I was expecting. I mean, I don't know the carat weights all that well, but just preparing for the podcast, looked that up, and 18 karat gold has 75% pure gold. So that's a decent amount of raw material fluctuation that you're seeing. Similar story with platinum. I think platinum is actually even higher. It's 95% of that raw material. So interesting to see that it hasn't necessarily translated to a huge price movement for those watches.
Yeah, absolutely. And for those that are not, well, we are primarily a finance podcast, so you would assume that everybody, or that a lot of people listening to this are either into vests or watches or both, or cars,
Yeah.
something of that nature, right? But for those that aren't, the watch market, along with the handbag market, collectibles, like art, the car market, they're very interesting markets because there's this high scarcity. They just don't make that many watches. They don't make that many collectible cars. They don't make that many collectible handbags, like the Birkin bag, for example. These are handmade, really art pieces more than they are anything else. So the supply is constrained. And the dealers, oftentimes, you can't just go in and buy one of these items, right? Which creates this interesting market that we're looking at. The secondary market is where a lot of the people are going and buying their products. And you would think, like with a couple things that happened last year, the increase in prices, you would kind of think that the increase in the price of the raw materials, you would think that the price would drift up. The tariffs originally on products from Switzerland, where a lot of these luxury products come from, were originally 30%. They were reduced later, but still increase in price there. And there's a lot of money going around. You would think that there was continued demand for these products, but we did really, like you were getting at, Nick, that did not play out over the last couple of years. Really, when the peak of this market, the collectible market, whether you're looking at watches, handbags, cars, any type of collectible art, anything like that, really peaked in the pandemic, and then has really been fairly stagnant, if not actually collapsed in on itself, especially in some of the lower end parts of the market. The more massive, I don't want to call them mass affluent, because you're still talking about items that cost thousands of dollars, if not tens of thousands of dollars or more. But a lot of the market that is the mass affluent really did not, was not able to maintain their prices and actually collapse a little bit, especially some of the watch companies like, Omega, Tudor, Rolex. Even though those are high-end pieces, they did not stay stay up, and that was consistent with the car market, for example, the collectible car market, and other art pieces. They've really collapsed, even though a lot of the raw materials are going up. So I don't know what you think of that, Nick, but it's very, very obvious now, especially with another year of data.
Yeah, it's we've definitely seen some weakness, especially compared to COVID, like you were mentioning. There's been a lot of interesting studies. One of the things that I wanted to look into a little bit for this podcast was there was for a period of time Bitcoin and watch prices were pretty highly correlated. Now that broke relatively recently, but especially with that initial pump when we saw Bitcoin prices jump really rapidly, late 2010s, things like that, we saw the secondary prices of these desirable assets, watches, cars, things like that. We also saw them spike at that time as well. Now that relationship is kind of broken down, so it's not that great for content today. But one of the interesting things to note as well, just because a lot of these things they trade off of almost hype, for the lack of a better term, and we kind of see that in the price of the Rolex day date market as it spiked in COVID when people are really excited about it and looking to spend their money in all sorts of different ways, and then it's moderated since then, and we've seen further moderation from that time period. And I think we see this in the secondary market as well, but notably taking a look at Rolex in particular, they announced price increases recently, and they only increased the price of only increased the price of their gold watches by 9% this year. So that's
Yeah.
to offset inflation, that's to offset tariffs, and that's to offset the increase in the cost of the raw material.
Right.
So found that one interesting.
It shows you how much um, profit they have built in here, and
Oh yeah.
really what you're buying here. And I think this comes down to, getting into, so as an investor, if somebody had asked you, how should I look at these assets that, can be portrayed as, maybe an investable asset class, how should I portray them? But and how should I think of them? Well, really, watches are luxury discretionary goods. Whereas gold and silver, for example, they're monetary assets. They're truly, there's a true secondary market for them. That's not just a collectible market. Not that there isn't there's a secondary market for these luxury goods as well, but that's a true asset class. And I think that it can be used as an excuse to buy some of these assets. And you oftentimes can not lose money in them or even make money in them, but your primary reason for buying them should not be, I'm going to make money in this particular asset, unless you are a dealer. If you're a watch dealer, a car dealer, a dealer of handbags or something like that, that's different, obviously, right? But if you're just an individual, it can potentially be a store of value, and you might even make some money on it. But it's not the same thing. That really should be a secondary thing, not a primary reason for going and buying a bunch of, collectible items,
I
in
think
my
that's one of
opinion.
those things that you use to justify it to your wife, but deep down we know that that's not the way to go.
Yeah, exactly. Well, and even if you want that as part of your portfolio, right? Let's say you want to, and some of these can be very significant purchases, especially the collectible art market, the watch market. I mean, you can spend hundreds of thousands of dollars, if not millions of dollars, on some of these pieces. So from that perspective, it is, you can understand why someone would consider that as part of their portfolio, and oftentimes they're able to at least retain their value, and sometimes they do very well. But at the end of the day, that you have to do that has to be a second reason for buying and investing in one of these asset classes, not the primary. You have to love that space. And coincidentally, in my opinion, the people that love that space and buy what they like and not think of it as an investment first are the ones that probably are likely to come out on top and actually make money anyways, because they did it for the right reason. But for people that are going out and buying watches, cars, primarily as an investment or art or whatever the case may be, it's probably not going to work out the way they wanted. You have to enjoy it first and foremost and not think of it as an asset that you're buying for appreciation.
Yeah, and I think it's a really interesting space right now. I mean, there's a number of companies that are democratizing the ownership of these high-end assets. You know, you can buy shares of a Lamborghini these days. It's pretty crazy.
Yeah.
Who's to say that that won't pay off for you in the long run? You know, maybe they make a good amount of money on buying assets like that, but they tend to be a little bit less predictable. They're not as easily traded.
Yeah.
It's a difficult space to make money in unless you're a true expert, where that's where you spend the majority of your time, and a dealer where you're offering a lower price than you're selling it for in the end, because you're doing so much in quantity and providing that service for both sellers and buyers. So
Right.
it's an interesting space as a whole.
Anybody that I know that has ever bought something and made significant money on the appreciation of some type of collectible item, they did not buy it as an investment first. It happened to turn out to be a great investment. It wasn't on purpose.
No.
But what is sometimes unfortunate is those people that buy that piece of art or that watch or that car, and they buy it for the right reason, and then let's say they buy a car for $50,000 and it becomes worth $1 million later on. A great case for this is the McLaren F1. Actually, 20 years ago, those were less than $1 million cars. They're now $30 million cars or
Yeah.
more. And a lot of times what's unfortunate is those become so pricey that the people that bought them for the right reason can't even enjoy them anymore because it's become so much of their net worth,
Yeah.
which is sad.
Yeah. I mean, there's just many assets as a whole that it kind of ruins it for some, from some perspectives, from the enthusiast point of view, because prices have just gone so out of hand. You know, cars, great example. Watches, another great example. Another one, guitars are another good one as well.
Yeah.
You've got something that was maybe $10,000 in the '90s, and definitely a stretch, especially for a musician to purchase like something like that. But within the reach of a lot of people. But now something like that might be worth $650,000 or something like
Yeah.
that. And it's just, yeah, I think there's just been a huge boom in the collectible market. A lot of companies themselves are capitalizing off of this by creating, artificial scarcity, and creating this sort of waitlist environment where you're trying to get some aspirational item. We've seen just a huge shift as just in general. I would say across the market, just of luxury goods and collectibles as a whole, just things that people use for enjoyment, that sort of thing. I think there's been a lot of excitement in that space, and a lot of prices going out of hand.
Yeah. Yeah, absolutely. Well, yeah, very interesting space to follow if you're interested. And I would say most people have at least one of these items that they're interested in. Not everybody, but some, most people find something that's slightly collectible, whether it be a coin collection or a watch collection or a car collection or something like that. But yeah, again, invest for something you like, not for the investment value, because they're not it's oftentimes not going to work out for you. But and it switching gears on that really quickly though, there is some non-correlation there. There's some true non-correlation within those asset classes. So even if it shouldn't be your reason for doing so, at the end of the day, these high-end collectibles, they truly are completely uncorrelated to the rest of the market, because we've seen, even in a market where the inputs have gone up as much as they have, gold and silver as our best example here with watches, the inputs have gone up somewhere between 60 and 150% in the last 12 months. But that's not being reflected in the price, right? But you had a period of time where those prices of those assets boomed significantly and outpaced the rest of the market. So again, that story is really true non-correlation. So I have heard some argue that the reason for doing that, if you were going to consider it as an investment, is not necessarily from a total return perspective, but it does give you a store of value that is totally uncorrelated to your liquid asset market, which there is some truth. There is a lot of truth to that, in my opinion.
Yeah. I mean, at the end of the day, these are expensive assets, and it is a financial decision to purchase one if that's what you decide to do. I mean, you can't take the financial aspect out of it. It's
Right.
probably going to be a significant chunk of money. So, thinking about the resale value if you need to part with the asset in the future is something worth considering. Maybe not your primary motivation for purchasing something, but something to consider as you might need the cash down the line.
Yeah, absolutely. So that's very true. Um, Very different than the normal purchase of a car or a consumer electronic that depreciates. It's interesting. I think a lot of people like looking at the car market, for example. They look at cars and they normally depreciate, right? Well, a lot of times these cars are not that cheap. A lot of these collectibles are not that cheap, even if you use them, because at the end of the day, they hold their value pretty well. Even if they don't necessarily appreciate at the pace of, the average of the S&P 500, for example, or if you look at gold and silver the last number of years. But um,
Yeah. Yeah, it's certainly something to consider.
certainly something to, yeah, definitely something to consider. But
Absolutely. Well, kind of along those lines, I wanted to tie this to just broader financial markets as a whole. I took a look at tariff reactions in luxury manufacturers or luxury companies. And I just thought I'd share this really quick.
yeah,
I found this intriguing. This was not what I expected to find. So this is the performance of a bunch of luxury retailers, luxury houses, I guess you could call them, conglomerates over the past year. So we got a number of announcements that really hit a number of these companies very hard, particularly the Swiss watch industry, because we saw tariffs, like you said, get to a point where they were about 39%. So that's going to hurt consumption of Swiss watches, increase the price, at least to some extent, that would be expected. And taking a look at the price reaction of these stocks throughout the year, we did see them pull back pretty notably when we got the Liberation Day tariff announcements. So that was on April 2nd. And we see pretty much every luxury company sell off. Pretty much everything at that time sold off. To be fair, the entire market as a whole was selling off at that point. But we would expect to see a pretty notable pullback, and we see that for the most part. What I noticed was throughout the year, as we got tariff increases on Switzerland in particular, and not all of these companies that are listed here are particularly exposed to Switzerland. I'm just pulling that out because of the watch connection. We do have the Swatch Group, which is very particularly exposed to Switzerland, obviously. So we would expect that one at least to react to it, if any of them are to react to something like that. And we see throughout the year as we get these tariff increases, really there's very muted price reaction from what I can see in these companies reacting to this increase in tariffs, which I found intriguing. I would have expected it to sell off as you see going from a 10% tariff to a 31% tariff and then to a 39% tariff. But that's just not what we see. And actually, a lot of these companies had great years. Even the Swatch Group, who is particularly exposed to these really high tariff rates, had a 16.56% return year, which is pretty much the S&P 500.
yeah,
Some of these other ones that are really watch heavy, Richemont, 41.83%. So uh, not the relationship that I was expecting to see. And then the one that really surprised me was this Tapestry Inc., which I didn't know what they did, but they do. They own Coach and Kate Spade, and they had a 95.58% year. So
well,
in that luxury segment as well, I just wanted to include them because that's a crazy return.
yeah. People still have money to spend on these luxury goods, whether they go up or down in price after they buy them.
Yeah, you definitely
Consumers,
see that. These
yeah,
companies did not suffer the way that you would expect.
yeah. definitely not. Yeah, the consumer was obviously strong enough to keep paying the prices even after the prices went up.
Yeah, and I think this ties to another interesting piece that we were talking about before we hopped on here. We saw different segments of the market holding up better than others this year in particular. We saw some declining sentiment of the US consumer throughout the year last year. And even though we saw that, we saw the upper end of the market performing very well. So here's the price change of watches that are in these price bands here. So we see at the lower end of the market, these less expensive watches lost value over that time
Hmm.
period. But as we move up market, there was a pretty solid story of growth in terms of price movement for these watches secondhand.
Right.
And so I think that reflects to some extent that maybe the upper end of the market or the higher income individuals, more wealthy individuals, they're still buying regardless.
Right.
And that's something that's been established pretty well over the past years. You know, the Patek Philippe that's selling to the multimillionaires, the billionaires, they're not going to feel the effects of a recession quite as much as maybe like Seiko or even an Omega. So
Yeah.
uh, we saw that play out there. And then I
Still
brought
not,
this.
still not the
Oh,
return of gold and silver.
oh no, nowhere near the return of gold and silver. Just showing a lot more resilience up at the higher end of the market.
Yeah. But it does show you that they again, the coming back to one of the main points here, which is we're not buying for, we're buying first for something you enjoy. That's the reason you get into these things. But they do hold their value and actually appreciate in a lot of cases. So they can be stores of value, and especially on the higher end stuff. The things, the items over $5,000, the $10,000, those tend to hold their value even better and are truly, again, the non-correlated assets versus the cheaper items. If you buy a $400 watch or a $300 watch, that's a very different, you're in a very different game than somebody who's buying a Richard Mille for, $1 million.
Yes, yes.
Totally different asset. Not even
Entirely
close to
different
the same.
clientele and something like that.
Yeah.
Speaking of which, this is another interesting thing I brought in here. I found this data intriguing earlier today. And this is just a chart. I have the Gini index for the US in this purple line here, and then the US real personal consumption expenditure on jewelry and watches also charted
And
here. So the
and what's
Gini
the
index.
Gini index?
Yeah, yeah. The Gini index or the Gini coefficient it's a way of measuring wealth inequality. So
Okay.
typically it's a figure from 0 to 1. In this case, it looks like Y charts is doing 0 to 100. So the higher that number is, the more inequality there is of wealth. If you had a 1 Gini coefficient or 100 in this case, then that's one person controls all the wealth. And then as
Okay.
we go down, it gets more and more equitable.
So this
Or
would this would say if the coefficient is 41.8, 41.8% of the wealth is controlled by, or 41.8% of the individuals control the wealth. Is that
I
is that
can't
getting
remember
right?
the exact breakdown. It's like the top X percent controls this amount of the wealth, and that's how it's calculated. But basically,
Yeah.
uh, for interpreting this chart, or what I noticed, all you really need to know is the higher the Gini coefficient, the more unequal the wealth distribution is.
Okay.
It, I think the thing that was intriguing to me, at least, was when we see the Gini index rise around the same time we see personal consumption of and expenditure on jewelry and watches increase as well, and when we see it pull back, we kind of notice that with spending on jewelry and watches as well. It's not always perfectly aligned. It always doesn't always happen at the exact same time, but just found that intriguing because it does seem like there is somewhat of a relationship here. So as wealth inequality increases, it seems that the US spends more on luxury goods.
Hmm. Yeah, that makes sense.
Yep.
Those individuals that are in the top, quartile, top percent of earners and wealth are, they're the ones spending money. They're the ones spending tens of thousands of dollars on art, jewelry, watches, cars, potentially hundreds of thousands of dollars on these items. So yeah, that would make sense and line up.
Yeah. Yeah, so I think that just kind of supports that piece that we were talking about earlier with the upper end of the market maybe not struggling as much when we see consumer sentiment
Yeah.
tailing off.
So what's your thesis for this, for if you're looking at collectible items and you're talking to an investor that wants to know if they should be investing in collectibles?
Yeah, I don't think I would make it a core part of my portfolio by any means. If you're already thinking about buying something, then it's certainly a reasonable approach to consider it a financial asset. In the event that you need to sell it, you need some liquidity in the future. It's definitely something to consider, but I would put my money elsewhere.
Yeah.
For an
But
investment, for solely an investment, you might get a ton of enjoyment out of it and maybe make a little bit of money too.
yeah,
But I think there's better places to make money.
buy it for your passion first and investment second, not the other way around.
Yep, yep. And I mean, like you said, if you're really excited about something, chances are other people are going to be excited about it as well. So, if you're really doing it for your own enjoyment, you might find something that people find valuable in the future as well. So,
Yes. Well, I think that the other thing in this is it takes time. It takes a lot of time for these things to play out. This isn't something that you're going to get into and get out of and make a quick buck. So you might as well buy something that you're passionate about.
yep.
All right. Well, with that being said, yeah, a little bit different podcast this week, and I have a little bit different trivia. Moving on to the trivia section this
All
week,
right.
I have some different trivia for you. I don't know if I'll stump you because you are a watch expert, but I got a couple of questions that
I don't know about that.
maybe will stump you.
We'll see.
All right. You have a couple questions too?
I do. I do. I got one watch related and then one of them just more finance related.
Okay, sounds good. Well, you want to go first?
Sure. I'll do the more finance related one. We'll start on a serious note.
Okay.
All right. True or false here?
Okay.
Historically, luxury stocks outperform the broader market in an economic downturn.
I'm going to say false.
True, actually.
Wait, say that. Well, now that I got the
No,
answer.
no, 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 no. You're all
They
good.
out they outperformed during an economic downturn.
Yep.
Yeah, that's true, right?
Yep. Yep.
Because that was what we just looked at there with the Gini index.
Basically, yeah.
Yeah.
Essentially, yeah. They just tend to hold up well because those are the people that are still spending.
Still spending regardless of the economy.
Half of $50 million is still $25 million. So you can support a lot of spending with that.
That's right. That's right. All right. I got a watch question for you, getting
Okay.
out of the serious stuff.
All right.
So the Watch Valley in Switzerland,
Okay.
where most of the watch manufacturers, the luxury watch manufacturers, are headquartered, stretches between what two cities?
Oh, I don't know.
I'll give you one of them.
Okay.
One of them's Geneva.
Okay. It like Bien or something like that.
It is Geneva to Basel.
Basel. Okay. Oh yeah,
Yeah.
like Basel World. Okay.
Yeah.
Yeah, I did not. I
No.
not a geography guy.
That's funny. That's all right. I was looking at going on vacation there. So I was looking at that the other day, and
Yeah, that would be
so
a fun place to
the
go.
geography was fresh in my mind.
That's pretty cool. That'd
Yeah.
be really neat.
Yeah, I think I might go on my honeymoon there.
Yeah, you should totally do that.
We'll see. Lake Lugano. My mother suggested that to me this last weekend, and I was looking into it. It's in northern Italy, southern Switzerland, and it's right just a couple hour drive from Geneva and Basel. So might have to make that happen.
Yeah, yeah, and you can buy a watch and then sneak it in your suitcase and maybe save some on tariffs.
That's right.
Not that you should do that though.
I would never do something like that.
Not that you should do that, but you could potentially.
Somebody with less, somebody who wasn't so by the book
Patriotic.
would, yeah, that wasn't so patriotic, would maybe do that, but not
Maybe
me.
it's a potential. It's a potential. All right, let's see here. I've got one more watch related question. I'm gonna think of how to word this. What currently operating watch company sold timepieces to Napoleon?
Um, Currently, I'm going to say Patek Philippe.
Unfortunately, no, it was Breguet.
Oh, okay.
Breguet is the oldest watch company. I think continuously operating it's Vacheron, but if you go just oldest, as in their founding, it's Breguet. I'm not quite sure on that Vacheron thing. I think they claim that they're the longest continuously operating one, but
Okay.
yes, I think he bought 3 timepieces because
Interesting.
men didn't wear watches back then. They had clocks or
Um, Pocket
potentially
watches.
pocket watches at some
Yeah.
point. But yeah, I think he bought more like a clock.
Yeah. Oh, that makes sense. Interesting. Breguet. All right. I did not know that.
Yep,
All right. I got
they've had some
one.
struggles here
Yeah.
recently.
They're not front and center anymore. The market's now dominated by Rolex, Patek Philippe,
Yep, yep,
Omega.
they're at the top of the Swatch group. So
Yeah.
let's see
All
some
right. I got
interesting
one
data.
more question for you. That is a stretch, but it's
Okay,
related to my Basel trivia
okay.
question. What famous athlete sponsored by Rolex was born in Basel?
What? I don't know.
He is a massively famous athlete.
Can you give me the sport?
Tennis.
It's not Federer, is it?
It's Roger Federer. Yep.
Okay. I know that he's sponsored by Rolex, but
Yep. Roger Federer, born in Basel, sponsored by what? Sponsored by Rolex. He didn't have to go
wow.
far to find his sponsor.
No, I'm sure they're a pretty good one.
Yep, not a bad one to get free watches. I assume he
Yeah,
gets free watches. I guess I don't know.
I would hope so.
Yeah. His agent's actually from Cleveland.
Oh, really?
So yeah, maybe I actually ran into him a couple times. He's a really, really nice guy. But
Oh,
I
nice.
don't think we had the opportunity to ask Roger about his watch contract.
Man, that's unfortunate. That'd be some interesting data
Someday, maybe.
someday. All right.
Well, that's it.
Well,
Do you have any other questions?
no, that's it. That's all I had.
Sounds good. Well, that'll wrap for the week then. And we'll be back next week, probably a little bit more traditional episode next week, but hopefully everybody enjoyed the little bit less traditional episode this week. Didn't want to just keep doing the same thing over and over again.
Yep. I think it was just a fun little change of pace.
Little change of pace. We'll be back next week again, though. And well, thank you, Nick. Appreciate it. Talk to you soon.
Yep, thank you. Thanks, everyone.
Bye.